Good morning, everybody, and welcome to the very first episode, I suppose you'd call it, Millie, of our catch-up with regards to who you guys are. So introduce yourself, Millie. Who are you, where are you, and what do you do?
Yeah, so I'm Millie from Fingerprint Financial Planning. So we work alongside Roy. Any mortgage advice, we speak to the clients straight away, even if they don't come with us. Obviously, as you know, Roy, we speak to a lot of people. So yeah, just with general advice. So as I said, even if we don't help them with their mortgage, just to help them to let them know what's out in the market, give them some general advice with their deposit, their money, and everything like that. So yeah, that's who we are.
Fantastic. So the idea of what we're trying to do here is sort of promote, show the world that you are out there. I mean, again, a bit of history behind me, 26 years of doing this job. I get approached by many different, I suppose, financial advisors, mortgage advisors, brokers, whatever you want to sort of label people as. But I always come back to you guys, mainly because I know Ben, who's one of the founders of Fingerprint. I've worked alongside Ben for over 20 years now. And for me, it's a big trust thing.
Yeah, 100%. I think that's the thing as well. If you build a good relationship, like it's more important than anything. We've got the main thing about us is we get all of our referrals, unless they come from you, it will be word of mouth. So it's people that we've built that relationship with. We've done their mortgage. We're now doing their children's mortgages. So it speaks volumes, yeah. So that with us obviously getting those referrals. So yeah, it's good.
Brilliant. Yeah, and I think for me as well, having worked within a sort of a high street agency, I've worked sort of in different sort of places, I guess you call it. I always sort of fall back to the fact that you guys have got access to whole of market and sometimes preferential rates. Is that right?
Yeah, absolutely. So we're whole of market. We're not tied to anyone at all. We're actually finding a lot of people now, they've already spoken to their bank, which I know a lot of people do. They'll go on like compare the market. They'll speak to the bank that they just have their debit card with. And we're actually finding a lot of them, even though they're getting the rates quoted from the bank, we're actually able to beat that because we've got access to absolutely everyone on the market.
Wow.
So yeah, that's a really important thing that I feel like a lot of people feel as though they need to just stick with their bank. It's like an unwritten loyalty, but yeah, not the case at all. So
and I think I hear that a lot. People just say, oh, no, I'm going to stick, as you said, quite rightly, stick with my bank. I've got a very dear friend of mine who just always goes back to his building society, and I keep saying to him, just shop around. And you know, it's not for everybody. I get that. I think there's probably fear factors from people that they're going to be led a merry dance. They're not going to be given the right advice. But again, from my side, and if I can impart any kind of confidence to anybody watching this, I do have access in the nicest possible way to Fingerprint, but I do have access to multiple different mortgage advisors, brokers, etc. At any one point. But I always come back to you guys, and personally as well.
Yeah, absolutely. And I think our Google reviews themselves, like they speak volumes. A lot of our clients, if you have a look at our website, they literally write essays. It's really lovely. But yeah,
it's important though, isn't it?
Absolutely, yeah, it means the world to us. So I just wanted to say another thing off the back of what you said about or what we said about the clients going to their bank. So I think when someone gets a mortgage, say with Halifax, for example, they feel as though they're then tied in for the rest of their mortgage. So they'll automatically get a letter when their product is obviously due for renewal. The easy option is just to stay with Halifax. Literally not the case at all. So yes, we do a lot of product transfers because they offer some good rates to their existing customers. But at the time, it's so important to look at the remortgages elsewhere because they could have such better rates elsewhere. And it's not just the case that you need to stick with that bank. So I think that's a really important point as well to make.
I think that there's an interesting example of what I've just had this week. My home insurance came up. Now, I shopped around last year. I couldn't beat the current policy that I'm just about to renew. But this time,
as you should have come to us. We do that as well.
Oh, no. I've just paid for it. Right. So I'm going to remember that next year.
Next time.
In October, I'm going to have a conversation with you guys. But again, it comes back to, I think there's a lot of people that are just horrendously busy with life, family, work. And by the time they get home, the last thing you want to be doing is just let's say, for example, with home insurance, but it's the same as your mortgage. if it's an easy transfer or just an easy product change, I haven't got to go through the rigmarole. I haven't got to go through the pain. I haven't got to go and see, just do it and be done with it. But you guys can save them. I suppose really the advice you give is free.
Yeah.
There are charges obviously associated. We won't go into those today, but quite often you'll also have charges even if you're renewing with your current lender, I believe, as well, to sort of set up arrangement fees.
Yeah, absolutely. So a lot of the products come with an arrangement fee. That's another thing that we're really hot on looking into, because especially with buy-to-lets as well, landlords can get hit with pretty hefty arrangement fees.
Wow.
So it looks as if they're getting a great rate of 4 point whatever in the current market. But actually, if you look into the product, it will come with like a £6,000 fee. And when you work that out, so if you're in like a 2-year fixed product and you work out getting that hefty £6,000, £7,000 fee,
that racks up that interest rate very quickly, doesn't it?
Absolutely. So I think, I don't know about other advisors or banks themselves, but they might advertise this product, which looks great on the outside, but obviously that's why we're here, to look actually into the costs, the T's and C's and things like that. So it doesn't actually turn out as great as it might look on the website.
So the key from today's video message is shop arounds, but actually get you to do the shop arounds.
Yeah, and the other thing I would say is, even if we submit an application, even when we get your offer out, every kind of fortnight, 10 days to a fortnight, we do check the rates. So until you actually complete, you're not tied into that product.
So that's another thing, isn't it? With everything, I mean, I know you messaged me this morning and we were kind of talking about sort of rates that are happening. I know you can't physically quote rates at the minute because FCA rules, I understand that. So anybody watching, no, we can't give you an exact interest rate, but you were mentioning something, is it about 2-year deals are changing or something?
Yeah, it's one of those where rates are coming down just very slowly. We're seeing the average 2-year fixed rate at kind of like high 5%, low 6s. 5-year fixed, we're not really recommending anyone to go onto a 5-year fixed at the moment. The majority, 90% of what we're doing is 2-year fixed rates.
Okay, cool.
Based on the fact that we hope by the end of next year going into 2025, I mean, obviously we can't guarantee anything, but we hope that rates will come down. I think at the minute, this is kind of the new norm that we see staying for at least kind of 12 months or so. But industry says hopefully by the end of next year, we'll see them slowly coming down. So we don't obviously want to, yes, there are 10-year fixed, 5-year fixed available, but we're kind of steering away from that.
Purely because there's going to be, well, the predictions are, and we see it not just on the mortgage side, but on the house selling side, and sort of where everything is going to head, like the base rate and everything, it is all indicating that sort of going into next year, we hope that it's going to become a little bit more affordable, a little bit more flexible with rates and so forth. So you and I can be catching up, keeping people updated, letting them know what's going on. Guys, if you would like to have a quick chat with Millie, drop me a message, or anyone on the team at Evolution, we'll put you in touch. As I say, it's completely free advice, whole of market. And I know you get preferential rates even with lenders that people wouldn't get themselves if they went directly occasionally. So that is definitely worth just a quick phone call and just have a chat with you guys and just see what you could do for them. So brilliant. Well, thanks, Millie. Really appreciate your time. Let's catch up in a couple of weeks to see what's sort of happening with the market. And then obviously if something really exciting happens within the market, we can jump on a call and share it with everybody as well. So absolutely fab. Thanks, Roy. Thank you. Brilliant. All right. I'll see you soon. Take care. Thanks, Millie. Bye. Cheers. Bye-bye.